Hello and welcome to G World Markets Academy. At GMA, we help you to understand the stocks and the money markets. On our series Beginner's Guide program, we are focusing more on the money markets, specifically Forex trading. On this particular guide, we shall look into three major elements about Forex trading. 1. What is Forex? 2. The main difference between the stocks and the money markets. And 3. Why is it that more and more people are investing in Forex trading? And by the end of the video, we'll also have looked into who are the key players and what major currencies are being traded in this market. So to begin with, what is Forex? The term is taken from two words, foreign exchange. It is a spontaneous act of buying and selling of currency. So you'll find currency is the commodity here which is being exchanged by the buyers and sellers. This market is one of the largest in the world, trading over $6.5 trillion on a daily basis. So by the size of the market, you can see this commodity is one of the highly sorted in the world. And so one could ask then, how do I access this market? There are two ways in which you could access this market. One could be manual or online via the electronic communication network which enables the online trading. A manual example could be a case whereby somebody travels from one country to another, say Kenya to the US or from the US to the UK. In this example, you'll find there is at one point buying of the US dollar and selling of the US dollar. And this could happen maybe when somebody walks into a Forex bureau or via the counter at the banking hall. So that's an example of manual access. The online access, as much as it could be via the electronic communication network, which you shall see, could also happen when you make a purchase via Visa card by buying a product which is quoted on a different currency from the one you have. So currency being a commodity, it is affected by the market forces, the demand and supply. And you will find because of this, the prices are continually changing. So the price could be X amount in 1 minute, and in maybe seconds or after a few minutes, the price has changed. This happens because this commodity is being sought all over the world. Somebody is buying, somebody is selling this commodity. So the prices are bound to change because of these fundamental market factors. So then one could ask, who are the players? Who are these people causing this to happen? So the major players, we have about 5, and the key ones are the central banks. Central banks are the ones who manage the interest rates and the inflation rates in a country. And you'll find these elements really affect the Forex prices. We shall look into details how these happen going forward. The other player is the commercial banks. The commercial banks come in to provide liquidity, and they also take part in trading. All these cash or these currencies are being transacted, they traverse by these banks. So you'd expect them to be very critical players. Then there's a corporation or companies who are importing or exporting products in different parts of the world. At some point, they'll buy the products in a currency different from what they have. Then they will seek somebody to exchange that currency with. So that's part of the Forex business, which is brought about by these corporations. Then you'll find there are brokers who play a key role as liquidity providers, as well as connecting retailers, who will be our main focus into how they access the market, how they identify their brokers, and how is it that they are able to maneuver the markets which are continuously changing. So having looked at that, we need to look at the difference between the stock and the money markets. And the difference comes in how the markets are structured. So the stock market is centralized. So there is a central location where the stock's prices are quoted. say the stocks for different company. They'll be quoted maybe in Nairobi Stock Exchange, New York Stock Exchange, or the London Stock Exchange, and all the players coming to access those prices from that common point. But the forex market is decentralized. It doesn't matter where the currency or which part of the world the currency is. So long as it's quoted and it's being provided in the market, anyone from any part of the world can access that currency or that commodity in that case. So looking at this diagram, there is a central point whereby we have the stock prices being listed. But when you come to the forex market, each player is interconnected in this communication network. You could find maybe a currency being sold in one part of the continent, and that currency or the price offered could be bought by somebody else in a different part or in a different continent. That's how the interconnection differs from the way the central location for the stock market. And the broker here is very key in connecting the retailer. And as we have said, we'll be able to look into how the retailer identifies the right broker to work with, who will be able to connect them now with the entire market. Having looked at the structure, the difference, and how the markets operate, then we need to look into what are the currencies being operated in this market. And there are 8 major currencies which are traded, or the products themselves. The most common is the US dollar, then the euro, sterling pound, Japanese yen, Canadian dollar, Australian dollar, the Swiss franc, and the New Zealand dollar. But we'll find these currencies are not traded as individuals, they are traded as pairs. And the most commonly traded pair is the Euro USD. And the pair which you choose to trade with depends on a number of factors, which we'll elaborate as we move forward. But the most important to look for when you're choosing the pair to work with is the volatility of that pair. And you also look at how stable it is given the different time frames you could be having. And also you look at what times is that currency pair most active. That way you'll be informed on which pair to choose. But that's a topic which we shall look into going forward. So having looked at the pairs, then we need to look at why is it that more and more people are investing in this market. And one of the most elements which brings people into this market is the liquidity. This market is highly liquid. You could take a position now, and within minutes or seconds you can liquidate your position, as opposed to a case of the stocks whereby you could have a position but it takes longer for you to liquidate that market. Then the other bit is the ease of access. All you need is some bit of capital, a laptop, and the internet, and you're able to access this market. Transaction costs are low for this once you get started, but again it depends on which broker you choose. So these are the elements we'll expound as we move forward on how to get started and how to choose the right broker for your business. Then use of leverage, which is a loan from a broker, it's also another element which attracts people into this business, because as opposed to the stock market, if you invest X amount, you can only access shares equivalent of the capital you invest. But with the forex market, with leverage, you can take positions of higher value than the capital you have invested. This is a very good point for forex traders, but again, it is a sword which catches on both sides, but we'll look into it and how you need to manage leverage. Then the other important point is the number of hours available for traders. These markets are open for 5 days a week, 24 hours per day. So once the markets open on a Sunday, they will close on Friday midnight. That gives the traders opportunities, a number of opportunities for them to be able to access the market. So that brings us to the end of our first module. And in our next module, we'll be discussing about the common forex terminologies. This will give you information and knowledge before you start maneuvering into the market. But from this module, you've been able to learn what is Forex, its difference between the stock and the money markets, the key players, the currencies, and why is it that more people are coming into this business. So once we cover the terminologies, you'll be able to get more information and what you need to do once you get started. Kindly leave a comment, subscribe, and hit the notification button so that you'll be notified once we release our next video. Thank you and bye-bye for now.